This is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Tuesday, January the 18th for a Forex and cryptocurrency market analysis for you. Before we get into everything, we want to remind you with our disclaimer that this video is for illustrative and educational purposes only. And if you have not done so, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked. And if you would also like to check out the book High Probable Japanese Candlestick Patterns, it's available on Amazon.com in paperback and Kindle versions. We will be discussing, a whole bunch of high probable Japanese candlestick patterns from the book and how they're impacting the current market trends. So we have lots of trading signals to talk about today. And now let's get into what is going on. So we have our Forex-trading-unlocked.com website pulled up for you. We have our workstation tab already hit and clicked. We're going to skip over, well, I guess we don't need to skip over the numbers. We might as well talk about these because obviously some impacted the market last week, not like people thought they would. CPI for Germany is coming out for tomorrow. CPI for England is also coming out tomorrow for the UK. And then we have PPI for that will also impact the UK. So the British pound and the euro US dollar will have a little bit of an impact with those numbers. CPI also for the Canadian dollar. Housing starts and building permits for the US dollar will actually come into play. It probably will mess with the interest rate markets should that happen. We all know that interest rates are a function of currency pricing. I would expect to see a little movement in volatility in the dollar crosses. Let's see, then we have on the 20th, not much on the 20th, then we go to Philly Fed coming out also for the US dollar. That will probably shake the markets a little bit. CPI for Japan. January 20th, we do have retail sales that could impact the British pound. Then we have, let's see, that is it. So that's it for the week. So we have some numbers that will probably wreak a little havoc on the markets. Euro US dollar right here, we had a bearish engulfing line sell signal that had occurred on Friday. So the market had topped out right here, as you see, going Thursday into Friday's trade, and now it has turned south, and since then has been pressing support, especially today since the markets are fully open around the globe. Now remember that we didn't have most of the U.S. markets were closed yesterday, so that definitely had a little bit of an impact on what was going on in the currency markets. It was pretty quiet for the most part yesterday. You can see that the range for the euro U.S. dollar was pretty tight. Now today, obviously, we have action. There were some numbers that came out today, but I don't think that that's really what is driving what is going on with the current move in the dollar. And speaking of the dollar, before we get really into this, let's see how the dollar had ended the week. Interestingly enough, notice how we had said that on Friday we had a bearish engulfing line for the euro. Irony is, on Friday we had a bullish engulfing line for the dollar index. Now, does that mean that we have turned around in the dollar as far as the trend and the trade? I would say probably not, but short term, without a doubt, this is a buy signal for the dollar index. Noting that overall the dollar has been in a bull market with just a bearish correction over the past month and a half. So I would be very cautious here being bearish, not just because I like the buy signal and the fact that we've had some follow-through going into yesterday with the currency markets. Obviously, this almost looks like an upside-down chart of the euro over the past few days. But what it does mean is that it's very likely that we're going to at least go sideways with the dollar to higher. It's very unlikely that we're going to take out the low from Friday where the other currencies such as the euro and the pound are going to accelerate and reverse gears over the next day or so. As you can see, we did a Fibonacci sequence here from this last swing low to this last swing high. Where do we break down to with this correction? We came right down in the 50% to 0.618 area, just penetrating a little bit below it on Friday. Very good corrective zone. You could put that in place with this bullish engulfing buy signal, and what does that spell out? Well, that spells out temporarily at least potentially a lot of strength in the US dollar. Now, does that mean that every single currency cross is going to all of a sudden become a bear versus the dollar? Absolutely not. Don't want you thinking this is just going to fall apart and on these other currencies. So we're going to go through which ones have the signals, which ones do not, as we get through this webinar. All right, so now that we have a clear view as to where the US dollar most likely is going to trend over the next few sessions, we can see that the Euro US dollar is exactly following suit with that, with not only having coinciding with an engulfing line sell signal, meaning the inverse of what's going on with the dollar index, we do have follow through. Now, remember that the euro has been trading in a pretty tight range for the better part of 2 months, okay? Where does this leave us as far as support and movement? Well, the 50% line we just already hit today. And the 0.618 here is right there. Now, if you notice, what occurred in this zone for the last 2 months? A bulk of the trading. We barely prodded below it. We couldn't really dip much further than that. We could barely get above it. This last swing move high did propel us to higher levels, but we failed just before 115. Notice that here, this is where we also have a lot of support here, which is probably going to be resistance in the short run, lining up key with this one right here. So as far as the euro, I would use caution with this one. It most likely might ride support a little bit, but I think that you're going to be contained pretty much in this zone for the next couple of sessions. That doesn't mean the same for the British pound US dollar. So let's go to British pound US dollar and see what's going on here. Look at here, we have a bearish engulfing line sell signal. So this coincides also with the Euro US dollar sell signal. Both are bearish engulfing lines. Does that mean that they're always the same signals at the same time? Absolutely not. It just happens to be happening with this. Now remember, for those of you that are not aware, that the Euro US dollar, or excuse me, the euro and the pound are the two biggest segments of the dollar index as far as controlling movement and direction, okay? So that's a pretty big thing that you need to consider when we are trying to figure out where is it going to go, okay? So as you can see that the pound is still laying on the lows right now, and it's very likely that you're going to see a continuation and follow through for this break. Now remember, the Euro US dollar is already trending into our support zone for our price target for that sell signal, at least on the intermediate term. So it's pretty much finishing off that sell. That's why I would be cautious if you are not already short. And if you are, this may be a place to take a little bit of a profit and wait for either another signal or at least keep your stops tight. Remember, we're not expecting a lot of follow through to the downside as far as the euro because of the volatility that we have noticed, okay? So now the pound, however, this is totally not a reflection of the same thing, okay? This here is showing a lot of momentum to the downside. So now remember, we just did the Euro US dollar, and it bottomed out pretty much the same time as the pound in the longer run from that last swing low to the recent swing high. This one here, however, has been trending the whole time, okay? So now, whereas with the Euro US dollar, it did help to put a cap on the current new move high. The Euro US dollar, for the most part, has been trending sideways to very slightly higher, nibbling at resistance. It has been making higher move highs and higher move lows, which we know is a sign of an uptrend. However, those higher move highs and higher move lows are not much higher than the previous swing lows and highs. So whereas with the pound here, as you can see, this thing has definitely been trending nicely. I mean, it's been like a rocket ship once it broke out of this little area here. Like to end the month of December and then head into 2022 with this follow through here, that's a lot. It's a big, big move. Now, what do we attribute this to? We attribute this mostly to the price of oil, okay? So because of oil, it does give us a little bit of strength to the pound versus the euro. And that's why I believe you saw this trend here with the pound versus having a sideways trade with the Euro US dollar, you know. So now what I would do is pay attention to this and be very mindful of this, okay? Now, for you pound traders that are short, you got a little room here. It's very unlikely. I mean, remember, we already touched into the 50% line for the euro US dollar for the sell signal. For the pound, there's still a lot of room here. We definitely have some room to gain here. As far as your risk level, be very cautious though. Anything above $1.3749, and this trend is back on the bullish campaign. Now, overall, remember, this market had been in a bear trend for a while, okay? So you have to be mindful of the fact that even though this is the biggest upside correction that we've had in the pound US dollar over the past year pretty much, it doesn't mean that the pound is going to become a big bull versus the dollar. This right now is being viewed as an upside correction. This sell signal right here is a continuation now of the downward momentum from the downtrend. What would change that? Well, let's put a little ray here. Okay, so we made this was a higher move high after a higher move low, is trending here, but it didn't take out any significant high. So I would say right here, this high right there, of around $1.3840. This is a key high right here. If we get above this, that confirms not just a bullish trend, but most likely a reversal in the long-term trend of the pound versus the US dollar, meaning that not that necessarily that the pound is going to become a raging bull versus the dollar, but even if you see dollar strength, you're probably going to see it less in the pound than you will versus, say, the euro or the Swiss or some other currencies that we're going to talk about. So I would expect the volatility to continue in these in the pound-dollar cross. The pound itself, I think, has a lot of momentum versus other currency crosses as well. Should we get any questions from you guys out there? If you want to talk about any currency crosses that go with the euro or the pound, the exotics, you can just go ahead and chime in on the chat here, and we'll get to them as we get through this webinar. All right, so we now have price targets for both the euro, the US dollar. Now remember, this all goes with the Dixie, the dollar index. Here was your bullish engulfing line that was occurred on Friday. Okay, that was the signaling of a short-term change in trend or a stop of the current bearish trend that had been going on with the dollar index. Okay, so this had been trending lower move lows, lower move highs. Now we have this buy signal. Now remember, this was in a bearish correction. The overall trend was a bull, so this becomes a trend trade. You always want to trade the action if you can and not the reaction for the most part, especially for less experienced traders. That's where you get the most bang for your buck. That is where you get your trend. So we have, once again, the euro US dollar that has gone and locked in with the Dixie buy signal. This has given us a sell signal. It's pretty much almost reached, but I would expect it to, even if it does continue lower, it'll be a grind like this. You'll see a lot of small days just slowly dissolving and hammering support. It doesn't mean that we can't go below this 112 even area for the euro US dollar. I just don't think you're going to see the acceleration like you have with the pound US dollar. Also, be mindful of the fact that typically when the currencies are moving and they are starting to trend, the pound versus other currencies will have more volatility than others. It is one of the most heavily traded currencies out there, and it always has a higher average daily range or average true range, depending on what time frame you're working on. Just because it does, it trades in a much wider price point than most other currencies. What are the reasons for that? Well, it is one of the most heavily traded currencies. It's one of the most rolled out of currencies from global positions from the economies around the world, just like the dollar. So that's why it does have a lot of volatility, and it has a lot of momentum also. When it starts to move, there's so many people that trade the pound that it really helps to exacerbate the swings. So right now to the downside, we are targeting this little area down here. We have a little bit of room going on as far as time and also distance. I do not think we will get below this $1.3383 area. I think it's likely we will settle somewhere in here and then balance out for a little bit. Now, what would cause this market to accelerate? The question is now that the dollar is in a trend trade, bouncing back to its bullish strength, is this going to fail, or is this the beginning of another strong leg higher for the dollar? This is where other factors come into play. As soon as right now we know that the market is factoring in at least 2 to 3 quarter point hikes by the Federal Reserve for the United States over the course of the next year. There are pundits calling that we need 7 or 8. I personally think that they should just juice it one whole point right off the bat, at least a half a point, get it over with, and then let the market settle and see how the economy withstands that over a 3 to 6 month period. But then I'm not a Fed governor, and God forbid you do what you used to do that used to work. So this they're way behind the curve as far as raising interest rates, and they should have raised them earlier so they could have actually been cutting in this time of inflation, which that would help us. The raising of inflation with the rise of inflation, especially at this accelerated rate. Now with interest rates going higher, taxes going higher, all kinds of valuations through the roof, this is going to cause an acceleration in inflation and a strapping of money supply. There's going to be issues with that too as far as the flow of money supply. These are factors that we will be able to trade off of over the course of this next year. So it's great. What does that mean for the pound US dollar as the propensity to have more than 3 rate hikes, or at least 3/4 of a point total hike in the next year? As that grows towards a higher number, that puts pressure on the pound US dollar. Okay, it puts pressure on the euro US dollar. Any currency versus the dollar puts a little bit of pressure, whether it's a bear or a bull versus in whatever cross you're talking about. Remember, as interest rates go higher, to add strength to the US dollar. Overall, does it give it lots of strength? No, but we right now are at the point where we're at the ceiling in bond pricing or interest rate pricing for the most part, especially for the short-term rates, and the longer term have started to edge lower, meaning higher in market rates. Remember, there's an inverse relationship. So now oil is the one thing that will help to keep the pound from being such a bear. So I would expect that when you see rallies in the pound, and this is where you see a lot of times in bear markets, you get your biggest counter trend moves, depending on the trend you're going. So you get some of your biggest rallies in a bear market, and you get some of your biggest breaks in a bull market. So since the pound US dollar has been in a bear market, it is now, we have a sell signal topping off that upside correction. We have a nice downside target to shoot for over the next week or two. We'll see what happens. Remember, we have a bunch of economic numbers for the British pound coming out this week as well. So right now we're targeting this area here. I would the trade was initiated already on Friday. That's when it ended, and definitely Sunday afternoon, evening when the markets opened up. If you haven't already jumped on this short, I would be cautious selling into where it's at. It doesn't mean, it's tough. Sometimes you need to sell into the lows. There's plenty of trend left, and sometimes there's not. But I would use caution because we're coming off a holiday market. We've probably seen the trend of the day completed. You'll probably see, I would look to sell rallies then more and then try and get into this trade versus trying to sell into the lows. And your risk now here, like if you had sold it yesterday up here, you're looking at 3670 area, which is only, a 70-point risk. Now you're here at 3583 and your high here is 3749. That's a big, you're looking at almost at $2 of risk to only make now 35.83 to 34.51, $1.50, or maybe down to 33.83. It's a 1-to-1 trade ratio for reward to risk, and I would just make sure that you probably shy away from that. That's just not the right trade to be doing. Not saying that it wouldn't work. U.S. dollar CHF. All right. U.S. dollar CHF. Here's a nice little explosive move to the upside. Well, we had a piercing line buy signal on Friday, and obviously we had a nice little move to the upside on Monday to start off the week, and then we've had follow through today with an explosive move taking out the highs of yesterday, because yesterday the market actually had more volatility in the Swiss. It's amazing how the Swiss had a much bigger range than the Euro US dollar, which tends to be the norm more than anything else lately. You typically used to be the opposite, where the euro had more of a range than the Swiss, but now the Swiss has been very active. However, it hasn't really gone anywhere. It's been going sideways for literally almost well, not a year, but for a good 8-9 months. But we are at the bottom point of our range, once again coinciding with the buy signal in the dollar index. The fact that we have sell signals in both the pound and the euro for the euro complex of currencies, and those are the two strongest ones versus the dollar, that also shows a little bit of likelihood that we're going to see a little bit of weakness in the Swiss, or strength in the dollar Swiss trade. Okay, now we had the piercing line buy signal Now we have the follow through. How far can we go with this one? Well, we're just going to use the old Fibonacci right here. We'll go off of this bigger swing high up here to try to find the extremes of where we can go. Oh, look at this. Okay. Now, if we go to 0.618 extreme right there and the 50%, odds of us hitting 50%, if we are correct on this dollar index and dollar strength theory, okay, if that signal is strong, most likely the US dollar Swiss will trend towards this area over the next few, 3 to 5 to 10 trading sessions, depending. Now, another thing is markets tend to go out like they come in. This had a severe sell-off. It's very likely that we could continue and have follow-through over the next couple sessions, especially if the economic numbers are favorable for the U.S. dollar. We know that the interest rate component's already factored in, which helps to give strength to the U.S. dollar Swiss trade. The oil too, the oil market, that's the other thing, where the oil market, as it continues higher, that helps to support the British pound. It doesn't help the euro and it doesn't help the Swiss, because neither country, neither the Swiss or the whole eurozone has oil. They are oil dependent. Okay, the UK controls all the oil offshore and around Europe and stuff. So, and also around the globe, they're very big in the oil industry. So, as oil continues to trend higher and push towards that $100 mark, that's another reason why you have a weakness in the euro and the Swiss versus the dollar, because we're no longer exporting. However, we are oil sufficient, at least, well, now we're importing oil, so we're not oil sufficient anymore. But we could be if an executive order ever gets overturned, which most likely will be, but not for another, 3 years. And it won't be just, even if it's, it may not even be a Republican, but if someone else on the Democrat side comes in, we know one thing is we're killing our backup grid, power grid that needs to be there as we go on to these renewable energies. We know that both wind and solar, especially when you get to storms and winter time, doesn't work. You need a backup power supply that can go on readily right away and supply all the power needs. The only thing that can do that would be old true network that we already have going. So to completely kill that industry, which is what they're trying to do in Washington and right now with the Democratic Party, the Green New Deal is going to give oil its run for its money. So right now, because they're putting a stranglehold on it, all the enemies of the United States, and this is it's not political, it's a reality, they've voiced it, as the nipple and desire for oil is strained, why wouldn't countries continue to cut their supply and help to drive prices higher and go on with the inflation? It behooves them. The Saudis their margins are much different than in the U.S. It costs them the same no matter what the price of oil is, and it's next to nothing to produce. So right now you're selling oil at just under $100 a barrel. Why would they be turning on the floodgates like our president has asked them to, when we could turn on our own? If we really wanted to increase supply, which right now our reserves are they're at the lowest. I don't know if you pay attention to oil numbers, we're at the lowest stocks we've been in years, over a decade. So, and that is just inexcusable, not to mention we just gave part of our reserves into the open market in the United States to kind of curb the price of gas. Well, that didn't really work too well, did it? So it took off 40 cents and gained 25 cents back. So it didn't do anything. And now this is something you need to pay attention to. The oil trade as well as the interest rate trade are going to be driving these currencies. So this zone here is pretty much, I think you'll fail somewhere around here. And this is if we're just in a short-term move. If the dollar really starts to trend strong, this would be a big area to get trade through, because then we will be targeting this upper end range here of around 93.5 cents. Remember, this has been in a big wide range trade for a good 9 to 10 months almost. So this is the area where we're looking to shoot for, gravitate to here, and then we'll see what's going on with the dollar after that. All right, US Dollar JPY. This one has been quite the trade. You want to talk about swinging all over the place. So on Friday we had a hammer reversal signal. So what does that usually mean? That's usually not necessarily meaning a total change in trend. It usually puts a stop on the current trend and it sets up a time for digestion. Then, however, it was followed by a bullish engulfing line buy signal. It was forming yesterday, so that was yesterday from our. We never got that video off because of technical problems and just got back in town. All right, and here is our buy signal that had occurred yesterday. And now today the market's pretty flat. Well, this one has had more activity than most of the other ones over the past week and a half. Interestingly enough, the hammer reversal occurred when these other signals occurred for both the pound, the euro, the Swiss, as well as the dollar index. Now, here's the thing about this trade. The U.S. dollar yen has been in a bullish market for a very long time. This one, no matter what, whatever the dollar does, it may become a big bear versus the euro and the pound, and this is something you want to take note of. The U.S. dollar yen is most likely going to continue to be a bull market. I would look to buy dips. I would be very cautious of selling into new highs. It's the interest rate factor alone. We know that the BOJ, the Bank of Japan, is not going to touch interest rates. They aren't doing anything. Now, the one thing they have going for them is the fact that they dropped all COVID restraints. They are back online fully. Every restaurant, bar, you name it, whatever, you don't have to wear a mask. There is no mandates for any type of being part of the 2-year test, or anything. The factories are back spun open. Toyota put a promise out in December already, when they knew the lockdowns are going to be lifted, that they are going to be producing over 800,000 extra Toyotas in the month of January. That's this month, that will be hitting the market and being shipped out to market by the beginning of February. So to the U.S. And now here's the thing is, they make Toyotas here. They're going to be sending Toyotas here. And this is going to become a big trend also. You think our supply chain, there's a lot of car companies that make cars in the United States. You would think you'd want to keep on doing that. Well, that would be great for the United States and for our employment and for our country. It doesn't matter whether it's a foreign car company owned or a U.S. car company owned. If you're making them here, that puts money in the pockets of Americans. It helps our economy. Well, the Bank of Japan is not going to start raising interest rates to gain strength in the yen. Why would that be? Because they're a little island at exports. They are more reliant on exports than imports. They only import materials they need to help them drive their exports, meaning oil. So yes, oil will definitely make give weakness to the Japanese yen. This is good for them. Think about this. If they sell 800,000 cars that they bring from Japan to the United States, for them it's a lot easier for them easier for us to buy them, for one, because of the currency difference, and it's easier for them to unload them. So it's a win-win situation right there. So that's going to help support the trend for the US dollar yen and also the economy for Japan. You got to realize that it's not just a couple days ago they opened up at the end of December. This is now, they're 3 weeks into it, so and right now they're thriving. There is not a single sign of them going back to what has been going on for the past year and a half, 2 years around the globe. They're done. COVID's gone. It doesn't exist anymore as far as they're concerned. It does. I'm not trying to, deny the fact that it is there, but they're getting on with life. You got to live with it. Because they can't survive. They can't lock down anymore. They're an island with an aging population. If they continue to do the protocols that the whole world is following right now and trying to push, the Japanese won't exist as a people anymore in the next decade or so. They'll all be gone, for the most part. And they won't be able to turn around when they have China breathing down their throats right now, because Japan is also a target of China. Their expansionist policy is not going to stop. So be mindful of this. How far can we go to the upside? Well, here's what Teddy has to say. I think it's very likely that we are going to breach this high that we had around 116.36. My overall target for the U.S. dollar yen is $1.22. Should we fall below this low right here of 113.49, that's when I think you may will have more sideways digestion. What would stimulate a sell-off here and a reversal of fortune? Well, I think the only thing that would do that would be if we started to cut rates in the United States. Ain't happening right now. or if oil was to take a big dive. Now, let's see, since we're talking about oil, Treasury bond futures are down over $1. What does that do? Well, that helps the U.S. dollar strength. We've been talking about that through this whole video. Now, let's remember on the CME site here, there is a little bit of a delay. Let's go to the energy. Let's see what oil is doing here, where it's been at over the last 15 minutes. Look at this. Oil's up $1.42, so from 84, around 84.48 right now in the futures. So, what does that mean? Stronger oil, stronger, higher interest rates. Odds are U.S. dollar yen is going to gravitate towards this 116. Only if you were to get a big rally in the U.S. in the 30-year and the 10-year notes would you most likely see a turn back to support, because oil isn't going to break off. Now, unless it did, if oil gets below 80 bucks, gets down to $75 a barrel, and if you see a big rally in the 30-year bond and the 10-year notes, then you could probably see us test support here below 113.49 and blah, 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 kind of grind around here. I don't see any extended sell-off. You would have to have a change in interest rate policy in the U.S., and we would have to start pumping oil in the U.S. too, which we're not. We're continuously set on a trend now to produce less and less oil. So that, like I said, will maintain the bullishness here. If you are a seller here, you keep your stops tight. I would be very cautious, because I think you're selling into a momentum you're not going to be able to fight. Australian dollar, US dollar had a lot of action over the past couple of days. It's following through to the downside. We had a bearish engulfing line sell signal, as you can see, that occurred over on Friday as well. So Friday was a big day for most currencies. No matter how they were trending, whether they were trending extremely or if they were just slightly gravitating higher or lower, like something like the Euro US dollar or the US dollar Swiss, which was been in a big sideways, something occurred on Friday. There was enough of a switch on Friday going into a holiday weekend in the U.S., which, remember, the rest of the world wasn't off on Monday. All their markets were open. They started on Sunday night, and the rest of the world was functioning. It was just the U.S. that was closed down for some of its markets. But the Australian dollar, it didn't care. You can see it had a big sell-off on Friday. Monday's trade yesterday was a little bit tight, just like the Euro US dollar. Today it's selling off. Now notice that this is has a bigger move than what's going on in the euro. Not quite as extreme as the pound. We've been making sequentially higher move highs and higher move lows. The trend here has been in an upside correction since the beginning of December. Well, here's the thing though. Now let's see what's going on. I would say that you have to be mindful of these swing lows right here. Now this is a solid trend here, 45-degree line pretty much. This is a very good slope to maintain a trend. Now if we fall below that, well, obviously we're triggering some new insights technically. So here's the last swing, higher move low. If we take out this low here, well, then we'll have a higher move high and a lower move low. That confirms at least a sideways to lower trade for the Australian US dollar. Remember, overall, it's been in a bear market. This has been a corrective move to the upside. By the way, ironically enough, this trend started with, see this low right here, and then followed by these two up days. This was a 3 inside up buy signal from you can learn about how to trade in the book, High Probable Japanese Candlestick Patterns, available on Amazon.com, don't forget. Anyhow, we have started this trend here, which became the correction, and we ended it here with a bearish engulfing line sell signal. We even had this swing high here, which was a bearish engulfing line. Trade chopped a little bit lower. Boom, here you go. Hit this target here, and then rallied up, made new highs. Once again, another high probable Japanese candlestick pattern. Does that mean that all swing highs and swing lows occur with high probable Japanese candlestick patterns? Absolutely not. But when they do, and especially when the nice thing about the currencies is when they're reinforced by other markets, like something I'm a big proponent of when it comes to what's the best indicator, I always tell people the market. The market itself and the other markets are the best indicator because it's in real time, there's no lag. Every indicator out there, no matter what mathematical formula you put, there is a lag no matter what. Always. It is never in complete real time. And there's nuances that the math will never be able to show you, that the reality of market movements will always start to show you little beacons. Hence, we have, when you started this video, if you've been with us from the beginning, we started with a dollar index signal. Now we know if the dollar index has a signal, there is a likelihood that some of the other currencies may also, or at least it will impact where those trends either continue from or reverse on. As we can see with this one, we have a lot of coinciding signals. At the same time, when you have that, that's usually your best moment of saying, hey, you know what? If the dollar index gives me a signal, and then I have a signal in the euro like we did, and the signal in the pound like we did, and then also in the yen like we did, and now we throw in the Australian dollar where this one has another one. If you're not one of those other currency cross traders, but you are an Australian dollar trader, well then yesterday would have been a great day to take advantage of this, of jumping in on this sell signal. Or even today when the market opened and rolled over into Tuesday's trading. So now that we know where our threshold, now think about this. If we fall below this upward sloping support line, keeping the trend intact, that is confirmation also adds a little fuel to the momentum to the downside for the bears. That will have us targeting this swing low here. Should we take out this swing low here, more momentum is likely to occur. Now, how much? Let's see. So if we take this last swing low to our top that occurred on Thursday, where do we go? Well, now this is interesting. And this is where, unlike a correction, you can see where when it becomes part of a trend trade, your momentum, you may get much more in your target value. All right, so like the euro US dollar, we don't have much further to go. Unlike the pound US dollar, where there's still a lot of free fall left. We are leaning what? We are trading right now at 71.80, and 71.56 is our first price point for a target. 71.31 is not that far off. That's our key swing low. Now remember, if we hit, excuse me, the 50% line here, that puts us right on the upward sloping support line. Excuse me. So it's very likely that we will see a good show of strength here. Probably putting a short-term stop on the trade. But be mindful. A rally to sell would be something to look for if you're more of an intraday trader. I would use caution selling into these lows right now, just because we're almost at our first price point. Granted, 71.18 down here is our extreme for this short-term sell signal. Now, short-term meaning this bearish engulfing line putting us into the zone that completes definitely the minimal area that you're looking for to shoot for. This here was a corrective move higher. Now we are resuming the overall trend. Now, if we're resuming the overall trend, it's likely that we will not only hit our target area, we may continue to trade lower and lower and lower. So we already know where our big support band is with Fibonacci. We know we have a swing low coming in right here. And then even we have this other swing low right here. And this would be another one. If we take out this swing low here, well, that confirms lower move lows and also most likely puts us in a position to target a new monthly low down to 70 even. Now, one thing you got to be mindful of this. What would drive this? The interest rate factor would be one thing that drives it. Australia does produce oil. They're a commodity country, so the strength of oil could put the brakes on this, meaning it's not going to sell off as much as like the pound would or some other currencies. But there's also the lockdown measures in Australia as well. So how are you producing oil if you're locking up everybody and constricting movements of what have you, everything from truckers to, you know, everything. So everything's gummed up and moving slower. So their ability to produce kind of goes in with the shortages around the globe, you know, helps to aid with that. So I don't know how much the oil trade is really going to play into the Australian US dollar. The only thing that would really, I think, help Australian dollar with that is if you had a big rally in oil really short in the short term that crosses 100 and hits like 105. That would give a lot of strength to the Australian dollar. Or an extreme sell-off move where we broke below 80 and went down to like 75, 70 bucks a barrel. That would give a lot of weakness to the Australian dollar in the short run. Remember, the interest rate trade is on the table. So we're looking at a couple more Forex markets before we get to the cryptocurrency markets. Remember, I know you guys wanted to talk about those. So let's see, do we have any questions on the chat? on Twitch and YouTube. Hey, here we go. What are your thoughts on British Pound JPY? So for Matthew, Mr. Harkin on YouTube, for those of you guys that are watching us. All right, let's check this out for him. All right, we're going to look at the New Zealand. We'll do the British Pound. All right. Oops, not GBP, JPY. Now, interesting. Remember, we've been talking about the whole oil and interest rate market. Well, now our interest rate market is something that doesn't come into play here. So that's off the table. Obviously, the BOJ and the BOE, the Bank of England, what their interest rate policy is going to help. Now, the British pound, when it comes to the interest rate thing, we know that the BOJ is not touching interest rates. As long as Japan's not touching interest rates, the question is what about the UK? The UK is not ready to make moves like the US as quickly and perhaps maybe as extreme as viewed by some, but it is ready to start doing something. The oil trade also is something that's on the table. So right now what you have in the British Pound JPY is you have a short-term correction. We had a big rally here from the beginning of December up until a couple weeks ago. We were basically a sideways trade, but this was our high right here. We topped up here, and then we pulled back. We made a higher move low. We made a lower move high. This was a failure here to continue to push through resistance. And now over the past few sessions, especially from Friday into today, we've made a lower move low, and now we're leaning on support again. So as far as in the short run right now, the British Pound JPY is kind of a bear. So why is that? Well, the JPY has been selling off for the most part for the last, you know how it was doing with the dollar. It had been selling off for a while. Now it's starting to turn. I think that since you have weakness in the pound here, Matt, and for all those that are listening, let's look at it. Now, the dollar's not involved, but look at how they're trading versus the dollar. The pound is weak versus the dollar right now. So is the yen, okay? However, the yen had been weak for a lot longer, trending over the past week or so than, the dollar had been weak versus the yen for over a week, whereas the pound, it wasn't as weak. Okay, so now you have a turnaround where the dollar is stronger than the pound. It's also stronger than the yen, but the pound is the one that's taking the hit. Okay, so to make this clear, let's look at the pound US dollar, and you can see how much it's down on the day. See how this is breaking? It's been trending lower now for 4 days, and it's on its low. Okay, the US dollar JPY, has been trending higher for only 3 days. Okay, or the US dollar has been trending, so meaning that the yen has only been trending lower versus the dollar for 3 days. So it doesn't have the momentum that the pound does as far as weakness versus the dollar. So now we go back to the British pound, and we go to JPY cross, and what do we have? That's why you have right now the British pound JPY is leaning on support. So now, what would turn this around here? Well, obviously the trend here is pretty strong for the pound JPY. So I'd be leery if you're a bear. Obviously, if you get above $1.5781, this thing is really going to be running for highs. Let's look at the weekly. As you can see, the trend here has been higher. Okay, on a weekly basis, we're buffering against resistance. So we failed to make that new high on the daily and the weekly, and we also have this high right here. So we're really close to a breakout. Could this be a head and shoulders forming? Yeah, it's possible. But overall, I would say that the trend is a bull. Short term and the intermediate term, it's a bull. Right now, we obviously are pulling back, okay? But I would view it as a short-term correction. So what I would look for right now, Matt, is a break to buy. If you're bullish, the pound JPY overall, which I think the overall trend is your friend, and I am bullish on this so far, but in the short run, it looks like we're going to maybe continue this correction. So let's give you an idea of how far we can go. So just off of Fibonacci level, we'll go to the highs there, okay, and then we'll find a nice little area here. So the 0.618 comes here, 50% comes right here. All right, so what would that leave us here? Coming down in this area here and trending lower would be, I think, the extreme for a correction. You can notice that this area here had been support, and this has been a kind of a swing pivotal level here where support became, it was originally support, then it starts to become resistance. You can see here, couldn't hold above it. Bam, it fails through here, taking out this low. Boom, we get this dip. This was a little reluctancy. When we rounded about, we came poked into this area, we failed, came back, made a lower move, higher move low, and then boom, once we can make a higher move high, accelerated through this zone. So I was just like this has been either the pivotal level to fall through or breach above. It's also been it's not a containment area, is what I'm saying. So I think that if you fall into it like this, you will bounce and then trend higher. Only if you fell through here would I remain very bearish, and I don't think that's going to happen at all. So I would be reluctant. If you're a bear, what I would use caution is follow the trend. So here you made a higher move low, and then here you made a lower move high. This was our first indication of a pause in trend. Now we're trending lower. We made a lower move low here. So obviously we're leaning on this right now. Okay, so because the low on Friday was 155.45.7, and now it's 155.47.5. So we're almost there. We're just a couple pips away from taking out the lows. I would assume that this trend is going to continue. I would key off of the high from today. Okay, so if you're a bear right now and you're looking to sell into this move, if you're not already short, I would use this as your risk. If you get above 156, coming off of this right here, that would be a very bullish sign. Okay, not extremely bullish sign, but it would be bullish enough to expect most likely a challenge of resistance. If we take out this 157 high, odds are we're going to be leaning on this high right here that goes back to October. Okay, and when we get above that, does that mean we're going to accelerate much higher? Not necessarily, but we could, and I think that what would drive that is if you see oil, and this is now key, Matt, if you're still paying attention. This is the last end note for you at the British Pound JPY. If oil continues to accelerate, now let's see where it's trading at right now, if it's moved higher. So oil is trading $1.55. It's at 84.59. It's $1.50 higher on the day. Should oil continue to trend higher this week, remember there's oil numbers that come out tomorrow. If we get above 87, 88, and we're leaning on the $90 a barrel, then I'll tell you what, all bets are off. Excuse me, for the bears. You will most likely see this market rally above 156.88 and be above 158.25 in a heartbeat. I would expect that if oil breaches the $88 to $90 a barrel level, that will give a lot of strength for the pound versus the yen. So that would be something I would be mindful of. Now, if oil stays kind of neutral to even maybe falls back on support, then the pound JPY I could see falling lower, making lower move lows. The expectancy, though, is this is the extreme for a break because of the Fibonacci analysis right there. And the fundamental analysis doesn't give us any reason to see that this market could fall below it. Now, does it mean that it's not going to and that it couldn't happen? Absolutely not. But the likelihood of it occurring is very slight. All right, well, thank you, Matt. Really appreciate you jumping in on this and contributing to a question. We like any of the exotic crosses that we don't normally cover. Everyone trades some different currency, and depending on where you are in the world, so not everything is based off of what the majors are. All right, so let's go back to New Zealand dollar, US dollar. Thanks again, Matt, once again. So New Zealand dollar also has a bearish engulfing line sell signal that occurred on Friday as well. This looks a lot like the Australian dollar, US dollar. This one, though, I think is not quite as negative as the Aussie. The Aussie I can see still beaming towards its lows. Not that this one can't. As far as what's left in this sell signal, I don't think there's much. You got a lot of support here, right around this level right here. And I think that you're going to see strength hold this market up. Now, if the US dollar really starts to pound all the currencies, the major currencies, well, then I could see the New Zealand dollar pushing new monthly, daily, weekly, and monthly lows, but not as extreme as, say, the Australian dollar or some other currency crosses. I would believe most likely you're going to see a grind. Like, I don't think you will see this type of a slide. Like, should we finally fall through this little support area here, I don't think it's like this little zone and then we have a significant slide. I think that most you'll see a gradual grind lower with the New Zealand dollar, US dollar. So use caution here. If you're a bear, I'd look to sell rallies right now before trying to jump on this trade. You know, look for any follow through. All right. Now let's go to the US dollar Canada. This one's been rocking and rolling. We had a head and shoulders pattern here. This is a shoulder, here's a head, and here's a shoulder. Boom, this market free fell into this support area. Now, the head and shoulders signal here really has pretty much run its course, it seems. Our target zone for this was below this Fibonacci area here. We had a 3 inside down sell signal where the head. So for those of you who aren't familiar with head and shoulders, let me make sure you can see this. This swing high is a shoulder, okay? And then we have over here, we have the head, this swing high, okay? And then we have right here, which would be the second shoulder. So hence, head and shoulders is the name for those of you that are not familiar. And then we also draw a neckline from this area to here. So as you can see, shoulder, head, shoulder, neckline, failure. So the failure of this neckline and also taking out this swing low was the negative signal. Confirm the weakness, bears jumped down this trade, great deal, right? Well, then we had this hammer reversal buy signal. Once again, you can learn about the hammer reversal buy signal in the book, High Probable Japanese Candlestick Patterns, available on Amazon.com. By the way, written by yours truly as well. So we had the hammer reversal buy signal, but then we also had this buy day afterwards. That's a significant little uptick as far as the US dollar Canada. So short term, we have not just a pause, but a buy signal. And the question is how big of a buy signal are we going to get? That's a good one. The US dollar Canada in the long term, really long term, has been a bear. Obviously, it's been in a corrective mode to the upside that started in October and ended in December, peaked, tried to ring around and create a little big sideways action, came up to the beginning of January, topped out, and we have been trending lower since then. So, interest rate factor alone gives dollar strength, which is, I think, slowing the slide on the US dollar Canada. However, there is the oil trade, so that kind of neutralizes things. Then there's what's going on in the economy with Canada, as well as, ironically, which I really am stunned of one of the biggest things geopolitically, is the fact that our current administration isn't totally getting along with the administration in Canada, and that's hard to believe because they're both, they're very liberal, and controlled, and they're all in partners with China, and they back off of China and all kinds of other things. But for some reason, we're butting heads, and that I thought when Biden got elected and once he got inaugurated that our deals with the U.S. Between Canada and the U.S. would start to go where they're talking and whatever, and things have actually gotten worse. I don't know how that happened. So it's a tough call for fundamentally what's going on with the U.S. dollar Canada. I would key off of this short-term buy signal. If you are a bull or an aggressive bull here, you know that your risk is the swing low from the other day. As far as a price target to the upside, I would key off of the fib levels. And let's give us a 50% target right here. Right around here, and a 0.618. This gives us our upside target zone. So we'll take away the fib. So somewhere in this little area here, I think is where you can expect to see the bulls run into a little problem. Okay? Now, does it mean that we're not going to rally even higher than this? No. Does it mean we're going to even get up there? No. But as for the short-term buy signal, your risk is $1.2454, and your minimal target is $1.2708. So if you look at it, we're trading at $25.55 right here, or excuse me, $1.2550. you have at least a buck and a half to upwards of $2 of profit potential on a trade that you're only risking $1. So the reward to risk ratio isn't too bad, especially considering you have the opportunity to still get in just above where the hammer buy was here and below the second day here. So as far as you're in the good zone for the buys if you're a bull and you want to act on this buy signal here. Now remember, if you're a bear, you got a lot of risk to the upside. I can't tell you if you're going to sell into this right now, I would definitely use key off of this high from 2 sessions ago. If you're short right now, this would be a low risk short, selling against this high, looking for a test of support. Your reward to risk ratio is pretty high. However, it goes against this signal. It does go with the short-term trend, because we are coming off a lower move low, but we could set a lower move high up in this zone and don't take out this shoulder. The only thing that really turns this market bullish is if we take out this shoulder high here of $1.2813. Well, obviously all bets are off then because you're coming close to the high set in the middle of December. And then also that would confirm a lower move high and a higher move low in the long term. And should we take out these highs, well, then the long-term trend no longer is bearish at all for the US dollar Canada. It becomes very bullish. But that's getting ahead of ourselves. We don't want to try and predict that one because technically we have the somewhat of a view that could happen. Fundamentally, though, this market is just unfathomable. All right, now let's get to the cryptocurrencies. I know that you guys some of you crypto people are like, when are you going to get through this Forex markets? Well, we just did. Okay, so now that we've gotten through the Forex markets, let's talk about the cryptocurrencies. So we had see this little red line bottom here where the opening and close are the same price? That was a long-legged doji that occurred a week ago. It was followed by a bullish engulfing line. Since then, the market has not made a lower move low. It's been just trended a little bit higher and has gone sideways for the most part. Okay, and now obviously the last 2 sessions, it's falling back on support. So we're coming off a lower move low and a lower move high followed, and now we're trying to figure out where we're going. So according to this buy signal here, this double buy signal, it is very likely that this market will stabilize here somewhere and then challenges 44,569 area. So this is what we're looking for. We are looking for a challenge of this level here and a breakout to the upside. Now, how far can that go? Well, we're going to just go off of this swing high here and this low here. All right. Now, if we go to the 50% level, that's there. And we go to the 60%, 6.618 level, that is there. All right, let's get rid of this so you can see a little bit better. All right, so this level here is where we need to breach to get up into here, which would be a good stopper. If it's just a corrective move higher, I wouldn't expect the market to get above this 47,380 for Bitcoin, okay? Now, if we look at the trend, though, it's been pretty steep. What happens if we take out this swing high and make it up into this target area? Well, we take out this downward sloping resistance that's keeping the trend intact. If we come up to this area here, then we will have made a higher move high after a higher move low, indicating at least a short-term change in trend and a neutral to higher trade for Bitcoin. Now, does that mean we're just going to explode to the upside? No, I think what's most likely going to occur is we may see a rounding out of this bottom and then see how we can get through it. And by attrition, we're going to go through this downward sloping resistance if we just stayed sideways for the next week or so. But I think it's very likely that we can get up into here. So the Bitcoin we always look at is kind of like the dollar index, even though it's not a composite of all the cryptocurrencies. Oddly enough, we had a buy signal here, and then we were followed by a bearish engulfing line here over the past a week ago. Same difference. We are looking for a breakout to the upside. Now, the nice thing about this is I had a discussion with somebody the other day who's heavy into Bitcoin, is like, I don't know if I should touch this Ethereum. I'm all wrapped up in that. I'm like, well, here's something you should ponder. Now, Ethereum has a similar situation forming like Bitcoin does. But how much room is there to go? So let's just say, hypothetically, that we're right about the buy signal in Bitcoin and Ethereum, and that they're going to grind towards their price targets. Okay? And this is hypothetically. This will show you why you want to look at these other cryptocurrencies and why you may invest or trade one versus the other. Let's go back to Bitcoin. All right. So if we're trading right now at 41,617, let's hypothetically say we're going to buy this right now. We're confident in our buy signal. We think we're going to breach this downward sloping resistance line, take out this last swing high, and trade at least up into this little target band here. So let's just say and let's say we get the whole extreme, 47,380. So we're at 41,670 right now. Okay, so that would give us what? That would give us 5,000, close to $6,000 of appreciation on this move. So if you're at 41,000 and you make 6,000, you're making, what is that? That's 5%-ish on that move. A little bit more than 5%. Okay. So now if we go to ETHUSD. This is a whole different story. Let's say we look at these buy signals and we're like, okay, this is a good reason to jump back in. I mean, you'd be getting in right when they occurred a week ago. Let's say we get the rally. We come through. We take out this swing high. We now come off a higher move low forming here and make a higher move high, confirming neutral to higher trading. And let's say we actually go all the way up here, and we'll go up to our 0.618, just like the Bitcoin example. We're at 3,112. We're looking at 4,080. Okay, so that's a $9,000, excuse me, a $900 move right there. So if we do that and we look at the pricing right now, I mean, a 10% move here would only be 300. You're looking at a 30% move to the upside here. Now, which would you rather be making? 30% on the same amount of money, or much less in this with the same movement, okay, with the same trend. So as far as Ethereum right now, I think for you aggressive bulls of the cryptocurrency space, it's your choice which one you choose, obviously, and what you do with your money. But your reward to risk ratio is much higher on Ethereum, given the same market movement and dynamics than it is with Bitcoin. So lesson of the day is that there's more than one way to trade these markets, and some of them trend and coincide a lot. That's why I call the Bitcoin the dollar index. It's kind of like Bitcoin is dollar index and Ethereum's like the euro almost, or the pound, one of those two. And then the other ones, depending on their volatility, are kind of like the other smaller crosses and what have you. So that's why we look at these markets just like any other market. We totally have our same type of view as how we approach them. Oh, thanks for those likes. We got 3 likes, 3 new likes on YouTube. Really appreciate that, guys. Yeah, if you don't mind, if you haven't done so, please like, share, and tweet out our video that's going on right now, and don't forget to subscribe to our YouTube and Twitch sites. So Ethereum, once again, this is a short-term buy. We're looking for a breach of that high around 3,425 and get up to around 4,080. Now, once you get up and towards this, let's say we get this target area, that's a good congestion zone here, and there was a lot of resistance just above that target area. You can see that this is actually where a lot of support was right here. So for us to kind of trend into here and start to go bobble, 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 bobble before we either go higher or lower is a very likely scenario to unfold. Now let's take a look at another cryptocurrency here. We got Monero Xmr USD. This one's leaning on support here. It's following somewhat like Bitcoin and Ethereum. However, I think it bottoms around the same time, finds support when they do. I don't have the upside potential though for Monero as you do with Ethereum and Bitcoin. I like Monero from basically 150 to 220, where it's in the range right now as far as being a buyer for a longer term hold. As far as where to take profits, I would say once you get above 300, especially 350, that's where you want to take some profits. If not, take a majority of your money off the table. Unlike Bitcoin and Ethereum, that I think do have the potentials to trend extremely higher, Bitcoin, especially since we are across the over 90% mined threshold, I do believe that Bitcoin will, once it's completely mined, that's when you're going to see the explosion of value. Is it going to go to 1 million? I don't know. Could it go to 500,000? Very easily. Just because of the shortage and then the demand and the run-up. However, that's also when you're going to probably have to look out for the fact that you'll see a spike in all cryptocurrencies as Bitcoin rallies. But as people buy into it and then sell out of it, all the whales, like there's, once it's done, and also the fact that quantum computing is probably going to completely just decimate the crypto space, the money's taken out. So I would be very cautious when we do get to those levels, and I don't doubt that that scenario could unfold. And should it do so, the technology is still viable for a lot of these cryptocurrencies, at least until quantum computing becomes mainstream. At that point, they all become like buggy whips when you're going to be traveling at light speed and being able to do all this stuff that cryptocurrencies can do with their technology even faster. You know, I mean, it's mind-boggling. So in the short run, I would view that, I mean, maybe cryptocurrencies are around for the next 200 years. I don't know. I think they will be, but in a different capacity. They're going to evolve, and what we have now is just an infancy view of what's going on. And I could see a run-up in Bitcoin that once it rallies up high and the money starts to really flow out, people aren't going to be buying Bitcoin at $750,000, $800,000. I mean, well, they will be. A lot of transactions will be done at that value. However, that's when all the whales for sure are going to be sucking out the money, and they're not going to be pouring it into to other cryptos. They're going to be taking the cash and running, you know. Or if they do pour it into something, it's not going to go back into Bitcoin and all these other things. So be mindful of that for the long run. So, and the technology aspect too is that Monero, unlike Bitcoin and Ethereum, it really has a ceiling. I think the floor is definitely around 150 to 220, and then the ceiling I think is between $300 and $400. Anything above that I don't think is a sustainable spike, because the technology becomes less affordable and it doesn't make sense anymore at those levels. So, and yet, in order for the currency, for that cryptocurrency to maintain itself, you would need that technology to be in use or utilized. Dogecoin, here we go. We always like to give a little peek at this just to see where it's at, and it continues to disappoint. I know some people that they own it from higher, and they're still very confident that the Doge will finally bounce. And I think this is just a slow degradation that, like, we're looking at it at 16 cents right now. Bitcoin could go to $1 million today. I don't think Bitcoin would get a spike above 40 cents. Then I think it would collapse afterwards. So I think that if you have anything vested in it, if it's minimal, well, forget about it and see, maybe it'll get a spike. Maybe one day someone will market it and meme it up to $1, you know. So, but as a whole, this is not just a dog, it's a dog with fleas, and it really, really, really just has no support. So if you're still in this trade, well, I don't know. If it's screw you money, you don't care about it, then you can just ride it down to zero and take your chances, I guess. But I would take your money and run, or at least take some off the table, because you'd rather get some out of this than let it go to zero. But that's just my view. All right, Euro, US dollar. We're going to end on this one where we started. Look at this. Okay, we already hit our target zone. So we were trading above this today, and now, bam, we really have hit hard into this one. That's pretty nice. All right, so sell signal has emerged. It has hit the target, and we are there. All right, folks, I want to thank you very much for your input. Once again, we had on YouTube some likes there and some comments, and also a question. Love that. Thank you, Matt. And then on Twitch, we definitely had some good viewers popping in today. Please make sure to like, share, and tell all your friends about in the trading industry about forex-trading-unlock.com. And also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. And with that, you can learn how to trade a whole bunch of these high probable Japanese candlestick patterns that we discussed today. So I want to thank you again for your time. I'm Teddy Kecksite once again from Forex Trading Unlocked. You guys, good luck in all your trading today and your participation.